Broadcasting from Millvale Studios, you are listening to Funny Money on the River's Edge Network. I'm your host, Tom Henry, and along with us is a guest host, Josh Berkowitz.
Yeah, thanks again for having me. It was a pleasure last time and again.
Yes, this is Josh's second time, and he was on just 2 weeks ago, I believe. And our producer, James Kerwin, as always.
James.
So tonight we're going to talk about just two companies, like we have been doing the last few weeks. And it's because, they're kind of companies that are direct competitors of one another and have interesting stories. Tonight we're doing the shipping industry. I mean, specifically we're doing like overnight packages and stuff.
Yeah.
So we're talking about FedEx and UPS.
Very important business in this world.
Right. And those are the two giants in the business. So I want to start out with FedEx. Because it has a real interesting story. And a lot of the story is related to the biography of this guy, Fred Smith.
Okay.
So Fred Smith, that's not like a really wild name. But
breaking a trend.
Yeah, I know, we've heard.
The name doesn't matter.
Yeah, but okay, so Fred Smith was born in Marks, Mississippi in 1944. He was the son of James Frederick Smith, who also went by Fred. Now, the elder Fred Smith was a successful businessman and a very successful businessman. He had co-founded, first of all, what he did is he started a motor coach company. He got buses, and he ran it really well, and it was eventually bought out by Greyhound, and it became Greyhound Dixie Lines. But it was originally, he founded as the Smith Motor Coach Company. And then he had a whole bunch of money from that. And he went in with a guy who had an idea for a restaurant chain. I'm not familiar with it. It's called the Toddle House. This is probably yeah, right. This is probably real early and in the South. So
did that work out for him, the restaurant business?
It wound up being a big success.
Wow, that's
yeah,
rare.
I know.
That's rare.
He got 2 home runs in a row.
Smart guy.
So, yeah, he must have known something about business. So it was a dramatic success. And, the Smith Motor Company, that was like a 1930s kind of deal. And the Toddle House was like late 30s, early 40s. But unfortunately, the elder Fred Smith died young. He died when Fred Smith, the little one, was only 4.
Oh.
So that's kind of tough.
It's heartbreaking, yeah.
Times were hard. The medicine wasn't
Cholera.
very advanced. Right. So the boy was raised by his mother and uncles. And not only that, Smith was crippled by bone disease as a small boy, and he had to wear those. He had to have like braces and crutches. You know what I mean?
Like Forrest Gump when he was
Yeah,
little.
exactly,
Okay.
exactly.
Is that true?
Yeah, but
Wow.
like Forrest Gump, he grew out of it.
In the dramatic fashion, or like probably not so much.
Well, I think the way they described it, it seemed like it was some rare thing that was like. That only affects you as a child.
Oh, okay.
And then by age 10, he regained his health. And eventually he became an excellent football player. And he learned to fly at age 15.
Nice.
I want to say, I forgot to cite my sources here. First of all, most of what everything I've said so far has come from Wikipedia. But now I'm about to go into part that is sourced from entrepreneur.com, an article that was published October 9th, 2008 about Fred Smith. All right, so Fred Smith was a good football player, learned to fly age 15. In order to learn to fly, like at age 15, you have to have some cash money.
Yeah.
So you can tell. I mean, we're talking.
Yeah.
This family was very wealthy because of the dad's
He's
success.
loaded out of his mind.
Yeah, and then after graduating high school, he went to Yale. And while attending Yale in the mid '60s, Fred wrote an economics term paper on the need for reliable overnight delivery
Wow.
in a computerized information age.
What a prescient man.
I know, right?
That's
because
forward-looking.
Incredibly.
in the 60s, like not too many people were thinking about the information age and computers. I mean, I didn't even know they were like. Well, I guess they had a couple
guys
of
are
those
ahead of
giant things. Yeah.
These guys are ahead of their time a lot, right?
Yes.
And even
often.
then, it was probably all like military too. It wasn't
Right,
civilian
the-
access or
right.
anything like that.
Steve Jobs.
Yeah.
It would have been very unusual. But, I guess being a very curious kid at Yale, he was aware of it. So
Kind of
he
amazing.
he wrote this premise for an overnight delivery business. And the professor gave him a C. And he wrote on the paper, this concept is interesting and well-informed. And not well-informed, and well-formed. But in order to earn better than a C, the idea must be feasible.
Oh, okay.
Wow.
That's kind of a kick to the teeth.
Yeah, it is.
Well,
So, right. I don't know.
guys are pessimistic.
Yeah.
I'm sure this professor has heard this,
Oh, yeah.
since.
Yeah.
I would like to hear
Totally
what
wrong.
he has to say now.
Wrong.
I'm sure he's probably no longer with us at this point. All right, so several years later, through a combination of innovative thinking, and this is directly quoted from the article, unbridled charisma. It's like,
Frank.
oh yeah, that's me, unbridled charisma, and sheer determination. Smith would use his interesting but unfeasible concept to found the world's first overnight delivery company and change the transportation industry forever.
Good for this guy.
And I'm
So-
sure there was like a certain amount of spite there. Like he probably just
Right,
like,
he probably
sent a letter
wanted-
to his professor like, "What's that?" Like,
Yeah. What's up?
I think he didn't just forget about him.
Probably. I mean, like most professors in a college,
I don't
like
remember it.
like 100 students in each lecture hall.
like yeah, professor's like, who are you?
Yeah, right.
Weird.
Oh, Fred Smith.
Yeah, how
That's
many-
real memorable.
yeah, you know how many C's I give out on a day-to-day basis?
Yeah. Right.
Be gone with you.
Back
saying
then, they gave
Fred.
out a lot more C's than they do now.
I'm saying Fred probably didn't remember the guy at all. It's just
Oh, really? Yeah.
inconsequential.
I mean, he didn't
And showed.
describe him in the article or anything. So after graduating Yale, Smith chose to enlist in the Marine Corps. Now, this is like the opposite of like people like Donald Trump or Dan Quayle, who like deliberately get a deferment, right? Because,
Right.
or what did they call that? A furlough
Cowards.
to avoid going to war in Vietnam.
They're afraid.
Yeah, they're not the only one. I mean, a lot of the
Yeah.
wealthy people did that back then.
Really?
In fact, in Vietnam, there was a real like shortage of people who were well educated because they would you had an excuse if you were going to like a good school, you had an excuse to not have to go to Vietnam.
Yeah,
You could be
I've
like,
heard that.
you could be like, because you could be like, hey, I'm going to be a real contribution to society. Do you want to put me in the front lines? No, let's put some dude who would work at Walmart in the front lines.
Cold-blooded.
Right. But they actually did that back then.
We saw Platoon, right?
Yeah. But this guy,
Charlie Sheen came from a very. He said,
It-
that the poor fight the wars.
you were that.
It's a
that-
great movie. By the
Well,
way. I love it.
in the case of Vietnam, that was certainly true.
Yeah.
And that's the last. Was that that last war where there was a draft? I think it is. Right.
I don't
Vietnam,
know.
yes.
Yeah.
Okay.
Okay. So Smith, breaking the trend, graduated from Yale and went ahead and enlisted in the Marine Corps. It's not even like a wussy
Yeah,
one to it.
he's going right in.
Right, he's going headlong into it. It was right during the war. It was a very ballsy move. Smith was good friends with John Kerry at the time also, who also graduated from Yale and enlisted in the military, which was unusual. Kerry joined the Navy. Smith, unlike Kerry, Smith completed 2 tours of duty in Vietnam. In a 1998 interview, Smith said, quote, "As a platoon leader in Vietnam, I was in charge of a group of youngsters who had come from very different backgrounds than I had. The experience gave me a very different perspective than most people who end up in senior management."
Wow.
You know, it's kind of odd that he would list in the Navy, or not the Navy, the Marines. Like if he was a pilot since he was 15. I mean,
Right.
I imagine that's more like a Air Force,
Air Force
or
thing.
even if you're in the Navy,
Yeah.
like the aerial end of it, not like a
Probably.
platoon leader.
I was
That's
also
kinda
surprised by
goofy.
that, and also his stepfather, who his dad died when he was really young, and his mom remarried. His stepfather had been an Air Force captain.
Really?
Yeah.
Huh, that's odd.
Maybe he's just doing it because of that.
Yeah,
It's
that's
like,
possible.
no, I'm gonna-
I want to do something else.
I want to go put me right in the jungle. and it'd be really intense.
Funny.
But this guy is obviously a very tough guy. So after Vietnam, Smith set about making his Yale term paper a reality. The idea was to create an integrated air and ground delivery system in which packages from all over the country would be flown to a central point, a hub, sorted, and then flown out again along specific routes or spokes to their destinations. Now, this is a really good idea. It worked at Walmart, actually employed something similar, but because they had figured, like in Walmart's case, that they would put stores in, not necessarily like in population centers, but in places that were most geographically efficient to be the center of a hub and spoke system. Okay. Now, so UPS, they would fly all the packages in from these different areas to one place, sort them all to where they are supposed to go, and then fly them out again. And then, like the flying would be done at night when the air lanes were relatively empty. And the airports used would be in sizable cities. Okay, so like, there would be Pittsburgh Airport, definitely a sizable city. And the trucks would carry the packages to their final destinations from there. Okay, whether they're in the city or smaller communities. Smith, in order to try to make this a reality, Smith invested $4 million that he'd inherited from his dad. He also was able to impress investors with his concept and his like amazing charisma.
Unbridled, even.
Yeah, right. And he raised $80 million in loans and equity investments. And this was in 1972.
That's a good chunk of cash.
Yes, it is. Especially then, because there was a lot of inflation between 1972 and now. So that would probably be worth like, $120 million. So, it was a good amount of cash, especially for a guy who had no business experience up to this point.
Did he go to Yale for like business or something along those lines? Would you say?
I assume I did not get his major, but I
Yeah.
assume it
Something
was
like
finance or something
Yeah.
because he's writing that paper.
Yeah, that
so
would make
he's
sense.
in
That would make sense.
like a management class or something. So he got that $80 million, and with that, he bought planes. Okay, and they began operations in 1973. All right, with 14 Falcon jets servicing 25 cities. And you wouldn't think, you're like, what? Nobody knows about this, but they used some of the money for marketing, and it was an overnight success. Like right away, people jumped on this.
Nice.
They're like, yeah, we want to transport our stuff quickly. Who wouldn't?
Yeah. Wants to wait around.
So, so it was an overnight success. That is until the price of gas shot through the roof in 1974. And I don't know if you know that much about that period of time, but
Caught him off guard.
there was like OPEC had decided they weren't going to sell us like very much oil, and we weren't producing much oil at all, and there was a big shortage. And Jimmy Carter put in price controls, and it was a mess. Nobody there were like big lines at the gas stations.
Yeah, I've heard tale of it.
So it was a really big mess, and the price of fuel of all sorts, gasoline, jet fuel, went up really high.
Could have bankrupted them.
Yeah.
In
So
a few weeks.
suddenly, when the price of gas
Yeah.
shot up, they started losing $1 million a month because of the expense. and they were by the end of 1974, they were $34 million in the hole,
Jeez.
and they needed to raise more money, or they were going to go under.
Okay, that's a lot.
Yeah, it is.
Yeah, then
I-
especially.
Right.
Right.
So
Word.
the weird kind of thing that happened to Fred that he attributes with the success or the survival of the company back then, and that was that he took a flight. FedEx was based in Memphis, and he took a flight from New York, and he was connecting to Memphis just on a whim. He saw an airplane. He saw a stand where the flight was going to Las Vegas, and just on a whim, he bought a ticket and went to Vegas instead. All right,
Good.
and then he that night he won 27 grand on blackjack. Just that
Nice.
night, he took that.
Wow.
I know, isn't that weird?
See, I can't tell if this guy's just got like so much good fortune backed his way.
Yeah,
or
I
if he's just,
know.
like, stupidly lucky.
That's
Like
crazy.
I don't know.
I know he does have a lot of good luck. So, he took that as an omen. Like, I've got to go through this. And he had been trying to raise money,
Yeah.
but everyone was turning him down because they were like, "Pff, gasoline. You have to. That's the main thing your company uses up, and that's the main thing that's in huge demand all over the world. So it was very unlikely that he could raise money from his current investors, but he took this as an inspiration, winning this 27 grand in blackjack, and then he went on another tour, and he was aggressively, marketing his idea and saying, "This, we're going to get over this hump."
Right.
And he got enough people to believe him that he raised $11 million.
Nice.
And that $11 million was enough to keep the company afloat, barely. So they kept the deliveries going. And then once they got over that period of time where the price was really high,
Gas. Yeah.
they were off to the races.
Cool.
Off to the races. The company expanded really rapidly. And so today, FedEx serves more than 220 countries and did over $50 billion in revenue
Nice.
in fiscal year 2016. Their fiscal year ends May 31st. So that their last
Yeah.
2016 ended May 31st. Now, let's look at where the stock is now.
All right. It's up a lot, right?
It is.
Yeah.
It's gone up a lot. But, since 2014, it's not that dramatic an increase. It went from 140 to 165 now.
Right.
Now, here's the interesting thing. Okay, it's got a PE of 25.57. It's got a 1% dividend, and it's got return on invested capital, ROIC,
yeah. What is it?
7.29%.
Not very high.
Not very high at all. So,
Oh,
you and I like to look at PE compared to ROIC.
I do. Yeah. Part of it. Part of the equation is that, I believe.
Right. And because the ROIC is so much lower than the PE, I count that as a strike against it. Now, moving forward, net debt to equity is 75%. Now, that's a little higher than I like. I like 65% or under. But 70, you could justify that if you have something else really good going on. So far, we don't when we're looking at these metrics. Here is the really good part. All right. Earnings are expected to go up 83% for this current year, which is their fiscal 2017. All right. So when you include, so that means if earnings go up 83%, you got to look at the forward PE because it's so different than what the current PE is, because the price to earnings ratio reflects what the earnings were over the last 12 months. But the forward PE reflects what the expected earnings are for the 12-month period that we're currently in. Okay, so the forward PE is only 13.8. However, that's still higher than the ROIC of 7.29.
Yeah.
So I still think it's overpriced.
I wouldn't buy it. I looked at it.
Yeah.
Yeah, I didn't like it. I thought it was too expensive.
It's still overpriced in my
Too
opinion.
expensive. Yeah.
But I'll tell you why the earnings are going up 83%.
Yeah. What's that about?
And that's because it's again because of fuel. It's because oil has come, the price of jet fuel has come down so much, and they've hedged their jet fuel, which means that they try and lock in a price for a few years, like so they'll buy options that allow them to pay a consistent price for gas for several
Regardless
years,
of if the market price change.
regardless of the right. But the thing is that their hedges ran out; their options expired in their fiscal year 2016. So now, instead of paying $100 a barrel of oil, that price, whatever that translates to for jet fuel, they're paying the much lower, like $45 a barrel price.
That's
And
good.
That's why the earnings are shooting up 83%. So now. Here's one reason you might buy it. I could maybe, because the PE isn't that different than the ROIC, and the debt to equity isn't that bad, and the earnings growth is great. You could justify buying it if you really thought that like online sales are going to take off, and they kind of are.
Yeah, I'd say over just the last 10 years or so.
Right.
I mean, I very rarely buy things in the store if I can get it online.
Yeah.
So.
Yeah, me too. And FedEx will get a lot of business from that.
Yeah.
That's
Is it?
that's the main driver of their business growth right now.
Is it an all-time high right now in the stock?
No, it's not.
Close though, right?
Yeah,
Close to an all-time high.
right. I think the
Yeah.
I shouldn't even say, but I think the all-time high is about 20 or 30 points higher than it is now.
Okay.
So, but anyway, for a $165 stock, that's not that big a percentage. But hey, that was FedEx. Crazy story, Fred Smith, and it's not that
Total
old a
badass,
company.
apparently.
Yeah, total badass.
Yeah, I wouldn't short the company, but I don't think I would buy it either.
Yeah, I agree with you. That's the same way I feel. I think it's like kind of fairly priced would be what I would say.
I would say it'd be really hard to make a lot of money off it.
Yeah,
At this point, you're not.
I
mean,
definitely
it's
wouldn't
tough.
go in
It
and
would be
buy
hard.
it.
A lot of things would have to go in your favor to really make a lot of money off it.
Right. You'd have to see
Basically everything.
a dramatic surge in online sales.
You'd
I
have
think.
to have everything go in your favor.
But you know what? The other company we're going to talk about has even more of a foothold in online sales. And we'll talk about that right after this break.
Okay.
Host of Gike's Got Game, 8 a.m. every Friday here on the River's Edge. I'll take a peek behind the sports media curtain, zoom out for the big picture, and as always, obsess over the details of the sports, teams, and players we love or love to hate. It's Gike's Got Game every Friday at 8 a.m. on the River's Edge.
Hey, this is Mike Sasson. If you've been searching for something to do with your pathetic life, guess what? This ain't it. But it'll kill about an hour. It's the Mike Sasson Show, starting 10 a.m. on July 19th, going to 11. It's going to be a lot of fun here on the River's Edge, a new kind of radio.
And we're back. Okay, so the next company we're going to talk about is their chief competitor, UPS. So UPS, all right, and by the way, I'm going to cite two different sources for this information. It's Wikipedia and the New York Times obituaries, June 7th, 1983, by Wolfgang Saxon.
Off
and
to a cheery start.
Yeah, right. It's the obituary of the founder. All right, and actually, he lived a really long time, so it's kind of cheery. James E. Casey was born in Pickhandle Gulch, Nevada.
I like this guy. We have the same initials. Exactly. That's exciting.
Oh, yeah, nice.
Funny.
In 1888. All right, So you can already tell this is going to be an older company than the other one. He founded the American Messenger Company in Seattle at the tender age of 19. He had a partner who was only 18, named Claude Ryan, and together they were able to borrow $100, just $100. And so, these are teenagers, and what they did is they like got their friends together, and were like, let's form a messenger company, and they were able with the $100 to rent the basement of a saloon. Okay, and that was their base, and they organized the messengers and the messages. And at that time, it's really important to recognize that the telephone was not yet a fixture in American households. So people used the telegraph, and often to deliver telegraph messages, you needed a messenger. All right. So these guys, they would go on foot, bicycle, or motorcycle. They had a couple motorcycles.
Really?
Yeah. Now they're this like little,
Oh yeah.
like old school motorcycles.
No love for the horse.
Yeah, yeah. It's like almost like a bike.
Yeah.
So like, what do they call those? Like half bikes?
Mopeds?
Mopeds, yeah. So all right, yeah. And his messengers were his brother George and a few other teenagers. Now he came up with this motto: best service and lowest rate. Very simple, right? All right.
Yeah, that's cool.
This is in Seattle, and so what they would do is they would stick this all over places where people hang out, bus stops or whatever. Best service, lowest rates. Will make your deliveries foot, bicycle, or motorcycle. And that they were competing with like 6 other messenger services in Seattle, and that little thing worked really well. And in 1913, they merged with another messenger service in Seattle, Everett McCabe's Motorcycle Messengers.
It's a mouthful.
Yeah, really, they were badasses there. The motorcycle messenger. All right. So this is when they began, by 1913, to focus more on packages instead of messages. And the reason is because the telephone was starting to get popular. And people were having them in their houses, so they no longer needed to send messages. So what else do you always need to send? Packages. All right. Now, things were running really well, and they began to dominate package delivery in the Seattle area. And in 1919, they expanded beyond Seattle, and they changed their name to United Parcel Service. And that is still their name today.
I always thought it meant postal.
That's parcel.
Fun fact.
Yeah, United Postal Service. That would be too close to the
Yeah,
post office.
that's why it always confused me when I was younger. I'm
Yeah.
like, wait, aren't they kind of the same thing? Like,
Yeah, it's
No, they're
parcel. No, yeah, it's totally private. So the change to package delivery, was the result of the telephones. Now, at this point, the other guy that he had in there, Claude Ryan, he sold out to Casey. He's like, yes, we've made a success. He's like, yeah, I'm going to take my money and go do something. So he left Casey to run the company on his own. And that actually wound up being really good for Casey. In 1922, the business expanded to L.A. They'd already gone to Oakland. I think that's where they went in 1919. And then they expanded into L.A. And at that point, they had enough money to buy a few trucks. Okay, so they bought a few trucks, and they decided, to paint them Pullman brown, and that's exactly how they are today. All right.
Standard.
Yep. By 1930, now, okay, so this is 8 years later, they had expanded into New York City, and soon after to other cities in the East and Midwest. So growing all over the country. All right. So it was obviously a very well-run company. They kept expanding, and they acquired something called common carrier rights in 1940. And what that does is it gives you, in the United States, the ability to deliver packages between all addresses, any customer, private or commercial. All right. In other words, you can't be like, oh, this guy's, a home invader. It's just the UPS dude, and they really didn't have any, instances of crimes being committed by UPS drivers. Okay, so now we're going to flash forward all the way to 1974. That's when FedEx was struggling with the gas prices. All right. But UPS, unlike FedEx, was all about ground at the time.
Never took to the air, I guess.
Yeah, it did not have a hub and spoke system. It was just a really well run ground delivery service.
That's cool.
All right. But this is in 1974. Okay, they did have one incident. All right, and that was when a package exploded at UPS's North Side Center on Beaver Avenue in Pittsburgh.
Oh, really?
Wow.
Yeah.
Crazy.
And it killed a 41-year-old guy, John Metz, and it injured 10 others.
Damn.
Now, this is kind of weird, too. They found out that the package came from Western Ohio and that it was destined for New Kensington, a motorcycle shop in New Kensington. And UPS claimed no liability in the incident, and the case was never solved. Very weird. It's like it was the Unabomber.
Pre-Unabomber.
Today, UPS is the world's largest package delivery company, delivering more than 15 million packages a day to more than 7.9 million customers a day in more than 220 different countries, like FedEx, they're the same countries. All right, now, this is important to notice. When comparing FedEx to UPS, UPS is approximately double the size of FedEx. FedEx has a market cap of $43.77 billion. UPS is $96.39 billion. So very close to double its size. I didn't think about that UPS was that much bigger before I started looking at this.
Yeah, that's interesting.
But they are huge, biggest in the world. Now when we look under the hood, obviously this guy Casey was really interesting. Yeah, he lived to 95, and I was reading in the New York Times, he was always a bachelor. He lived at the Waldorf Astoria by himself.
Wow.
Dude, yeah.
Yeah,
ballsy.
that's like,
Yeah.
that's pretty good. And he kept like a low
Nice.
profile.
Classy.
That's kind of the
Just,
way to go.
Sipping martinis up
Yeah, I was
there.
gonna say,
yeah.
like, that's exactly what I was picturing.
Right.
Yes. I mean,
Super
What else
rich.
would you be doing up there?
Yeah, bringing some
Yeah.
random women back.
Hopefully.
All right, yeah, or whatever. He's super rich. He can do what he
Definitely
wants.
the martini. Yeah.
He's earned that right.
Right. But like, Fred Smith was a family man. This guy is different. Okay, so the PE right now is 19.67. The dividend, all right, unlike FedEx, which has a 1% dividend, this has a 2.85% dividend. So
Way better.
a dividend not to be sneezed at. The ROIC, the 1 year ROIC, meaning the ROIC over the last 12 months, was 37.56%.
Pretty high.
Very high. And it's typically, if you look over the last 5 years, the average is like 28%. So they've been running at a very high
Good.
clip. Yeah. So you can tell by that it's a well-managed company. Now here's the problem. Okay. Net debt to equity, 331%.
That's
What are they doing with that?
a lot.
I was like, why do they do that? I'm trying to figure it out. I'll get into that more in a minute. But first, okay, analysts, with their forecasts, figure that this current year is going to be up over the last one in terms of earnings by 8.4%. Not bad at all. Okay, but let's go back to the problem. The problem is way too much debt. Why do they have that debt? Well, it turns out that they throw so much money back out to the investor. They do stock buybacks like crazy. In fact, they have a policy stated that through 2019, they're going to give out 100% of their net income back to shareholders.
Wow, that's crazy.
And they're going to do that through dividends and stock buybacks. Now, So you think like, okay, so I guess you're going to forget about the debt, and what about capital expenditures? Because that's not included in net income. If you're going to spend all your net income, how are you going to have money left for capital expenditures? Capital expenditures are buying things like new trucks, buying airplanes,
Stuff like that.
yeah, expanding, buying a new warehouse. So, and sometimes you just have to. You just have to replace trucks that break down. You have to replace airplanes that are outdated. There are warehouses that are no longer functional. You have to build a new one just to keep your business
How
afloat.
can they afford that? Can they?
Yes, and this is how, because now there's an expense that is part of net income that is called depreciation. And what that is like when things wear out, when they get older, like a truck. As it gets older, there is some loss of usefulness of it, right? I mean,
Right,
we can
yeah,
all
of
acknowledge
course,
that
yeah.
eventually the truck is going to be probably break down, right?
Yeah.
It's not going to keep running forever. All right. So that little bit that it loses each year is called its depreciation. That bit of value it loses just from wear and tear going on. Okay. And it turns out that UPS has about $2 billion of depreciation a year with all these things, airplanes, trucks, warehouses.
Yeah.
They lose value as time goes on. So, and machines, sorting machines, things like that. So those things all deteriorate, and that's a real expense, but the government makes you calculate it a certain way, the IRS. And then there's another way that it is calculated by GAAP, which is generally accepted accounting procedures. All right, and that's the GAAP way is the way you report it to shareholders also. So what that does is that's like an expense that they take, but it's not an actual cash outlay. They're not actually
Right.
spending $2 billion. It's just that the thing is degrading at some rate, and they're guesstimating it's around $2 billion a year. So in order to make their capital expenditures are $2 billion a year. So they just spend exactly the amount that the equipment degrades.
Weird.
Yeah, it is weird because it doesn't leave anything to pay down their debt. So it's like they're going to just sit there with this huge amount of debt and keep going forward. All right, now on the bright side, like Amazon uses UPS almost exclusively.
Okay.
So that's huge. And Amazon keeps
really?
growing.
That's pretty big.
It's by far the biggest customer for UPS.
Yeah.
And I think online sales are just going north. I don't think there's any doubt about it. Every year for the last 8 years, online sales keep increasing.
And it's easy.
And they're increasing dramatically.
Yeah, it's convenient.
Right.
You can compare prices without going between like 7 or 8 physical locations. And I mean,
Right. And the delivery expense isn't that much.
no, not at all.
And here's the other advantage they have. The fact that they are the biggest, they're twice the size of FedEx, enables them to have really good economies of scale. Meaning like
Yeah.
that each time, because they have all these different airplanes and trucks everywhere, that, they can move a package very easily without having to have any kind of extraordinary expense because of that. And they can, do a lot for a slightly lower cost than their competitors. So that's a really good aspect of the business. So I actually found this one sort of interesting, except for the fact, that I just can't get over that debt. 331%. I like to, as I said, I like 65% or lower. So that's just too much. I mean, I like the fundamentals. The company's obviously very well run. It's growing, but I don't know why they don't want to pay down their debt, but they don't.
It almost looks like something that might be good to get in on before the bubble pops. Like if they're going to pay out dividends and stuff like that,
Right,
you get
right.
in before they, the debt comes into play.
Yeah, they're going to keep supporting the stock by buybacks, and they're going to keep paying out a nice dividend. So,
You're a buyer.
no, I'm not at this point.
All right.
I will say that over the since 2014, it's only gone from $104 to $109.58. So it's not a big leap at all. Even though the company is doing really well, making a lot of cash. And I think that a lot of the reason is because there are a lot of investors like me who look at that debt and get scared. What happens if the economy takes a really drastic downturn? You're holding on to all that debt. That's
You're
dangerous.
also buying the top of the. I mean,
Yeah,
it's near an all-time high. I mean,
you think we're buying the stock itself?
yeah, you want to buy the high? All right.
Yeah, I don't know.
I don't-
Sometimes it's okay
It's
to buy
okay
the high.
sometimes, but not usually.
Not usually. You're right.
No.
Especially, one
Sometimes
good
it might
thing.
work out, but not overall.
One good, just very simple thing to do is look at the range of the stock. Look at what they always have a 52-week range. Well, not always, but often.
Yeah.
When you're looking up a stock like on Yahoo or something, look for the 52-week range and try not to buy at the top of that.
Yeah.
It's just a
Yeah,
good
yeah,
idea
no,
not
I
to.
agree.
Because it tends to go down from there. I don't know why. I mean, no, I do know why. It's just like people see it as being too expensive at that point.
These companies are typical, I think, of what the market's like right now.
Right.
It's just very expensive.
It's just a little.
It's expensive.
It's too high.
Dude, I don't know. I sold some stuff today.
Yeah. I have shorts on the overall market also.
You do?
Yeah. As well as
Probably
a lot of individual
Could work.
longs. But
But I did some selling today, some trimming, because
That's a
I
good
looked
idea.
at some gains and I thought,
why not lock them in now?
these are at all-time highs too.
Yeah.
And I just don't. There's other places I'd rather have my money.
There's some very good
than
investors.
expensive companies.
Yeah. There's some very good investors shorting the market right now.
I'm not going to short it, but I'm selling some positions, so it's kind of
Right. Yeah. Yeah.
similar, but
Right. I would recommend that to almost anyone. If you have some good gains, take them now
kind of think you're right.
because the market looks toppy.
I agree.
I mean, a lot of these, when we go through the stocks that we've looked at in the last 2 months,
All very
I would say
expensive.
they're almost all expensive. Yeah. So,
We're going to keep looking for stocks that are cheaper, I think, is kind of the bottom line.
right. All right. We're going to hunt
There's
some
not
out.
many.
We're going to
There are
find
many.
them for you, though,
Yeah, we're going to
All right.
do that. We'll try to do that.
on our next episode because tonight
All right.
we are all out
Take it
of
easy.
funny money.